There are no guarantees in crypto, but if you watch this video, I'm going to give you the most near guarantee in crypto that you will not only be prepared for the next crypto move and Bitcoin move, it's going to be a macro move. I'm going to show you how to be prepared for it and to see it before it happens. I'm going to show you how to put it on your chart so that you know at any moment the probability of the next macro move being up is X, and or at least over 50%. You won't know the exact. You won't 67.2. You won't know that, but greater than 50%. And I'll give you the exact areas, and you'll be able to set up on your chart when that probability flips. It's now more probable, statistically probable, to have a macro move down, and I need to make adjustments to my altcoin play. A near guarantee, and I'm going to show you how to set up on your chart. This will be a very exciting episode, and I am at the very beginning of a private live stream, and I'm recording the first Bitcoin analysis snippet for YouTube. So if you want to check out the private community, there is a blue button down below for the YouTube community that says join. If you click it, a video will pop up showing what it offers, and also if you want a more intimate experience with sharing, talking to me in person, and jumping on live streams. That is essentially like a Zoom room, sharing your screen if you have your own ideas. That is what the Discord is for. The link to that is in the description section. So with no further ado, pull up your panties, put down the bong, let's go get some Bitcoin. However, before we do that, let's start off to see why Bitcoin really might hit over $1 million this bull run, or on a reserved end, why over $250,000 is actually a pretty reserved price target. It really is. So let's take a look at this chart. You probably, if you're on public YouTube here, you've probably never seen this chart before, laid out the way I have it. These are what I call origin lines. A sequential trader named Tone Vase, back in maybe 2018 when I was really studying price action, he used that word just randomly, and because it went back all the way to the origin and price. So I don't know if he technically coined that word, but I ran with it. So we sharing the coining of the word. These are called origin lines because they go back all the way to the origin of Bitcoin price when Bitcoin, was like $1 and $11 and all that. Even though this is not on the index chart. So all this price action would be more visible. This is the Bitfinex chart. On the index, it would go all the way back, and you'd see a nice price action back here. So I had the years labeled so you can see what's going on in all the tops. Take a look at this section right here. Bitcoin, before this bear market, had never been in here. The support band for all bear markets was this middle area. So what it was previous macro support, when you break down, previous support often becomes future resistance. And if there is a 4-year cycle maintained for Bitcoin, this is the 4-year cycle right here. I simply walking up this line until November of 2025. That's 1.25 million. So that is a reasonable price target because on a macro basis, this was support the first time ever breaking below. If it rides up this line, goes parabolic, that would be a target. Is that my number one guess, the most probable thing to happen? Absolutely not. But if it were to happen, this chart shows why it makes absolutely perfect sense. Absolutely perfect sense. And on a reserved price for Bitcoin is just maintaining in here. I didn't draw that very well. Here, let's do it a little bit more intelligently here. So if Bitcoin just stays in that red box, same thing. I'm going to take it out to about November, last week of November right there. The beginning of the last week of November, something like this. There we go. Accidentally made a vertical line. Okay, so if it simply hits the top of this box, okay, it stays in this box and just goes like this. Nothing fancy. No parabolic moves. 0 parabolic moves. Look at this biatch. That's over 300K. Uh-oh, my computer's lagging. Isn't that badass? All right, so now, whether or not this next macro move will come down or up will essentially provide you the targets for the bull market. If Bitcoin breaks down and below here and makes a monthly higher low somewhere around the 30s or low 40s, which would make sense because Bitcoin set its own record of 7 monthly green candles in a row. Didn't even happen in 2011, 2012 when price was going from fractions of a penny up to $1,300. Didn't even happen during that. It became the best performing asset in the history of humankind and didn't have 7 closing green months in a row. So it would make sense to have a nice, healthy monthly pullback after setting a monthly record down in the low 40s, a wick to the maybe even mid 30s, but a monthly closure in the low to mid 40s. Maybe even high 40s on a closure basis. All right. So this is what the intro was about. I'm going to show you how to determine and to tell before it happens and or to determine, oops, today it's probable to make a macro move down. And if price takes a turn the next day and it crosses a specific threshold, oops, today it's now slightly more probable that the next macro moves up. And as price separates from this probability flip line that I'm going to show you, separates farther away down or separates farther away up, it simply becomes more than 50% probable for every step down, or no, for every step up, or more than 50% probable to be a macro move down for every step, for every little bit more distance it goes below. All right. And why this is important is because if we do get a monthly pullback, this 1.25 million stuff, you need to stay in here and zoom out of it for that to be a target most likely. So therefore, if it breaks down from here, then targets would probably be closer to maybe even as low as 180,000, but your max reasonable target would be about $300,000, $320,000. And that's why this is so important, because on a macro basis, but it's even more important on a short-term basis, because if you're holding altcoins and you think, I bought the dip, and all that stuff, which actually might have been the right play. This could easily go up. But if the probabilities flip, you could get, and you're not aware, you could get caught with your panties down. All right, so here we go. That near guarantee. So now that we see this, I'm going to focus on this origin line. And historically, if you go below an origin line, get rejected, and take out what I call the punch low. So I'll zoom into this area over here. Sorry, I just burped in the microphone. I'm drinking a LaCroix. So this rule has, these origin line rules stick. They don't get broken. There are several origin line rules. Only one ever among all of them has ever been broken, and that was during May of 2021. That 𝐃𝐢𝐬𝐜𝐸, because that was clearly a game plan from either a Bitcoin cartel or groups of people with a lot of money, maybe even BlackRock. All right. So once you go below an origin line, you punch through it. That is a punch low. That's my verbiage for that. You get a punch low. You end up not staying above. Once you take out that punch low, you must hit the next origin line down or lower before you can ever get back above here. Particularly before you ever hit the next origin line up. So if you take out this punch low, you cannot hit that line until the line down from the one you took out the punch low. You have to hit that. But Bitcoin once ever has snaked around. It clearly followed the rule, but instead of hitting it like this, if you break down from the punch low, it can actually go sideways and hit that line and then go up. So because it touched that line before it ever went up, and so you can go sideways into the line. Just a heads up. It doesn't mean you'll drop a lot, but usually when you take out a punch low, you actually go down 2 origin lines. All right, that is just how price moves. It's just how it moves. Next one. You went down, got rejected. Here's your punch low. You got rejected, took out the punch low, and guess what? Crash. And I bet if I zoom into this point, the acceleration point happened almost exactly right there. I actually don't know that, but it should. That's usually how price works. There you go. See how you had a nice buyback on that candle? But once you closed it below there, smack, exactly at this punch low. You punch below that origin line and boom, that's the acceleration point. It's just the way price works. That's why in this works on things more than just origin lines. It can be short-term price action if you have a horizontal. You go punch low, get rejected, take out that punch low. That's when price accelerates. And if you inverse the screen, the same thing happens to the upside. If you go above support, land on it and get above your punch high, that's exactly when Bitcoin just always accelerates in crypto. That's just how it works. It's almost the same play every single time, both up and down. And it doesn't have to be an origin line. It can be horizontal support, so on and so forth. All right. So I could show you example after example after example, but that's how this works. So now, what I have been sharing. So if you want to try to set this one line up on your chart, you can see here it shouldn't be too hard because there is no previous price action to really base off. So you can zoom into current local price, maybe on the daily chart. So let's go to the daily, zoom in, and simply try to make this bottom line look similar by really focusing on price action between late August of 2023 and late October of 2023. That is that zone, August through October. It kind of rides through there. So price did dip below it just a little bit, but guess what? Look, it punched through it and it did not get rejected. Punched through it, did not get rejected. Punched through it, did not get rejected. But if you were to ever take out that punch low, that's when it crashes. Every time in history. However, BlackRock is kind of changing the scope, but they aren't breaking that rule yet. So BlackRock is in their algorithms and the algorithmic movements of Bitcoin now, because it doesn't move like retail anymore. that was over in 2018. 2019 is when Bitcoin became algorithmic and did not function off of higher highs and higher lows to go up. It actually likes to go lower low, then higher high, because it's all algorithmic now. However, the algorithms are following this rule in the new way that Bitcoin is moving very algorithmically, as opposed to human emotion based. Okay, which was much easier to trade. Bitcoin's really difficult, a lot trickier nowadays. Okay, so you have that line. And I'm on the daily, try to make it look like this. You just need this line right here, right there. And I'm going to show you two more things that you'll want to set up on your chart for that quote unquote near guarantee. All right. So again, August through October of 2023. And then it comes up shy of the wick of this recent July. And the recent price action did go below it. Now, what you're going to want to do is go to the 4-hour chart. Now that you have that line, zoom in a little bit to price. And you're going to want to go to indicators and just type in EMA fill and play around with one until you find one that only has 2 options. That's a lot of options. So here's one with 2 options. Here's one with 2 options. Some EMA fills have more options. You wouldn't want that. So you'll want one with 2 choices, and on the 4-hour, you're going to put the 10 and 21. And in order to make it those colors, you would go to the tile stab. I mixed up the S. The style tab. I like tile stab. I'm gonna tile stab you. Make a prison shank out of tile floor. All right, so it's these colors right here, and you got to make the opacity almost all the way over. Those are the 2 color schemes right there. Okay, nice and pretty. You're going to want to make that happen again, but we're going to make this represent the weekly 10 and 21 EMA cross, which is pretty big YouTuber out there whose name might or might not rhyme with Schmoen. He calls it what's his name for it? Bull market support band. but it's important to look at it on the 4-hour in conjunction with this origin line, this small EMA cloud, and we're going to do the same type of EMA cloud, but representative of the weekly, the 10 and 21, but keeping it on the 4-hour. I'll show you why. This is why this probability flip stuff is going to help you, and this is part of my, quote-unquote near crypto guarantee that you will not only be prepared, but you'll be able to anticipate the move because you know the probabilities. All right. So we're going to 4 hours goes into 1 day 6 times. 1 day goes into a week 7 times. So we're going to take these same numbers and multiply each by 42. So coincidentally, put the bong down. The first one is 420. That was not planned. That's just how it worked out. Dirt. And then the second one is going to be 882. And that is the weekly 21 EMA. 882 EMA on the 4-hour is the weekly 21. Hit the eyeball to make it appear, maybe. Boom. Now that is the same EMA cloud, but on the weekly. So take a look. The support band, so the dark one is the weekly, and we're kind of ignoring the 4-hour one for now. Let me make myself a little smaller. So look at this origin line, the same origin line. This big band. All right, let me get rid of the small one. Oh, wrong one. This big band flipped red barely, but price action on my origin line, the same origin line, it never took out punch lows. So you knew that although this flipped red, if you don't ever take out a punch low after going under it, you're going to go up despite that turning red. So we're mixing it, and the reason why this is important to mix structure with mathematical lines that algorithms can see. Most people do not have this line on their chart, but you do now, as long as you took the time to do that, or do take the time in the near future. This is a math line. It's an invisible line that only big money can see. And me, I can see it too. And you can too. We're special now, okay? We're part of like a elite club here. Because the reason why this stuff happens is because big algorithms of big smart money, they like to trigger other less sophisticated algorithms to go short by triggering their, because it's algorithmic, so it's based on triggers. So they trigger them to go short because they can go long with more money if they trick others to go short, because it's a 1-for-1. If you want $20 million of longs, there has to be $20 million of shorts in that same area. And if there are not, and your boss says you must long with $20 million of my money, wouldn't that be an awesome job? Like, hell yeah, I'll long 20 million of your money. You must long 20 million of my money, but there's only $10 million of people willing to short, for example. You have to fake them out and invite them to go short. All right? But if you invite them with this trigger and structurally take out a punch low, you will invite too many bears, and the people trying to take longs will lose because it's taking on too much risk, and you're inviting too many other sellers accumulatively that would overpower your will to make price go up. So you can't have it both ways typically. There is one exception if you go something like this. Pop, pop, immediately. It'd have to be a V shape. That's a dip and rip. There is one exception to that. But you would see it the next day because it would dip and rip. Or the next week. It would be a very fast move. So there is technically one, but that has never happened. If you take out an origin line, take out a punch low, that hasn't ever been violated. However, Bitcoin does move differently. So if you do see a V shape recovery after taking it out, just be prepared that it was a double trick. You not only activated this EMA cloud to go short, but you triggered other people to go short and you immediately bought it back up. But it would be a very fast move. I would assume you would see the V shape within 48 hours because you would have to dig it up out of there because you'd be inviting too many other bearish people, and your plans to go long would get ruined no matter how much money you have. Okay. Quote unquote, no matter how much money you have. Okay. So this cloud is still green, but we're getting rejected by it, right? we have a punch low. We're pretty far away from it. However, if you go another punch low and then take that out, you have a new punch low. And my community knows 45-degree angles are loved by crypto. So if that were to happen, it'd also be right there. And if you took it out, boom, you might actually accelerate before the second punch low because you go below this 45-degree angle, because that's just how crypto makes higher lows. It's just how it works. And if you go below it, it's statistically probable to simply take out the look left low. So now we're going to put on the smaller cloud. And right now, we kind of have a three-way deal. Price is below this cloud, the weekly one, the support band, the bull market support band. Got rejected from it, but nice higher low here. So it has a great chance of going up. And it behaved pretty bullishly on this line. So it's above 2 items, but below the big nasty one. So technically right now, I would be neutral, leaning bullish. But at this 4-hour candle has 5 minutes left, for example. If it were to close below there, I would immediately 5 minutes later be neutral, leaning bearish, because you're below 2 items, but above the third, which is probably tied for the most important. Like the 2 outer ones are the most important. So anywhere between the big band and this origin line, you are neutral leaning somewhere, or just neutral in general. I'm neutral leaning center. I'm straight neutral. So either straight neutral or neutral leaning if you're below, or if you're between the 2 outer vice grips. But this one right here is kind of telling you which way to lean. If you're above the small cloud, you're neutral, but you're between here, these 2 areas, you're neutral leaning bullish. If you start closing below, you're neutral leaning bearish. If you start going below here, yes, you could be at a 45-degree angle, and you could bounce there, but since you're below all 3, you actually get bearish with the expectations you might bounce at this area and try it all over again. You would be prepared for that, because crypto loves to go below support just to satisfy touching the elevator button like a 2-year-old, that 45-degree angle. It just loves doing that. So that is the 4th thing you need on your chart. I would draw rough, just make it look like that, because crypto loves touching that and then getting back above support. So this is always invisible support, always and forever. It's algorithmic. That is how it works. Actually, it's not even algorithmic. It's also retail. It's just how crypto moves. Kind of like if you drop an egg, it'll just drop. It will happen. If you're on Earth or a place with gravity. So I've shown you how to set up at least one of these origin lines. The bull market support band. The short-term time frame, decide which way to lean, as long as you're between the outers. And then this 45-degree angle. And with all of these tools, I'm telling you, you're going to be ready. And the best thing is, I'll show you an example. Last October, so that area of, we talked about August through October 2023, it's the same thing. It's the same thing. The same thing is happening. Watch. I'll just show you. We'll play it live. So the last time this happened, you just make up your mind. Would I have been prepared, and would I have known the probabilities at any moment in time, no matter what's happening? Okay, same thing. Watch. So you have the small band going below the monthly support band. You're incoming, getting ready to touch this origin line, as this has yet to flip red. Now watch. So you'd be so since you're between these 2 outer indicators, you are neutral leaning bearish because you're below the small cloud. Now you're neutral leaning bullish. Now you're neutral leaning bearish. Still neutral leaning bearish, neutral leaning bullish, neutral. See, just 4 hours later, neutral leaning bearish, just keeps flip-flop probabilities. And then you're straight bullish, but you got an immediate reaction. So you go for a bearish thing. So you went from being bearish immediately to bullish, or neutral leaning bullish. See that dip rip? So now you're neutral leaning bullish because you're below this one. Now this is crossing red. Ooh, that looks pretty bad, but this is your punch low. And you're above the origin line. You're just fine. You're just fine until you take this out. As long as you don't take that out, you're perfectly fine. Okay, so back to neutral leaning bullish. Probability flips. Now you're bullish. And you come back to use that band as support. Use it as support again. Once you take out this high, you should accelerate. Uh-oh, getting bearish again. Uh-oh, the probabilities flipped again. Probabilities flipped again. So now you're below the weekly support, which is the skinny guy here. Boom. But you had a punch low, never took it out. It should accelerate once it gets above this line, and then it accelerates. So remember when I said it works both up and down? So this is essentially your punch high. You punched. So once you find support and you go above that punch, that is when you accelerate. I mean, just look, that's when you accelerate. It works. It just works. That's how crypto moves. So hopefully seeing this will prepare you for the idea that through using these tools, yes, from one 4-hour candle to the next, the probabilities might be different. You could go within one day from being straight bearish because you're below all three to when you wake up, crap, I'm neutral leaning bullish. But you always have the punch lows, punch highs. That's when you're going to accelerate. And it's the same thing happening right now. I really hope that you liked what you saw. Leave me some comments. Let me know if I was unclear about anything or super clear about everything, if you found this helpful, or if you're having trouble setting things up on your chart with an like I can't find the EMA fill, let me know in the comment section. Plus, if you get it, not only could you get a response from me to help you out, but it helps me help you because it helps the algo. Go ahead and check out the Discord link in the description section. Check out the blue join button down below to check out either the Discord in the description or the YouTube tier community with the blue join button. We'll see you on the flip side.